Have you ever heard the saying it's as easy as 1, 2, 3? No, seriously. 1, 2, 3. 1, market structure, 2, liquidity, and 3, supply and demand. And what's interesting is it's only these 3 core principles that make up the majority of what smart money trading is all about. So we have to ask ourselves a few questions when looking at charts. Well, for one, where is price going? Well, in this specific example, we are making lower lows and lower highs. So therefore, the market structure is bearish. Number 2, what is the last buying or selling volume counter trend before the overall market structure is continued? Well, since we're in a bearish market, we need to look for the last buying volume that made an overall lower low. Higher high, higher low, high, low, high, low, high, low, failed to make a higher high, and that's where we rolled over and made the overall lower low to continue with the market structure. So this last buying volume is what created the supply. Number 3, how is the market being manipulated around these specific levels? So as we look here, price has come up into this specific level a few times, creating equal highs. We actually had 1, 2, and 3 touches. So there's liquidity, aka stop losses, resting above those highs. And the best part about it is if you get a liquidity run to take these equal highs into this level of supply at the right time of day, whether that be London session open or London New York crossover, and we make a break of structure, lower low, and come back for a mitigation, well, all I have to say is back up the Brinks truck, you're gonna get paid. Fellow traders, I hope you guys are doing well. In this video, I'm going to be discussing with you something that is so oftentimes overlooked in this industry, yet so crucial. So just like you saw in that Chef JPY example, I broke down 3 core principles of smart money that make up the majority of what smart money trading is all about. And that has everything to do with market structure, supply and demand levels, and liquidity. And I know what you're probably saying, oh, there's more that goes into it than just that. And you would be right. There are more intricacies and finer details that we need to understand in order to build a well-rounded system. But one of the biggest problems I see traders face is that they're trying to go too quick, too fast, right? We need to push the brakes a little bit harder, take a step back, and understand trading from a pure fundamental standpoint. What are the basics? What is it that what drives the market? In addition to that, we need to have a holistic perspective, right? We are not trading just one time frame. We are trading all the time frames in conjunction with one another, right? Because the market is fractal. Everything happens on every single time frame, and price is only being delivered one way. So for an example, the 1 hour time frame is just a zoomed in version of the higher time frames, just like the 1 hour time frame is also the zoomed out version of the lower time frames. So in this video, I'm going to be giving you guys a breakdown of my favorite pair, NZD CAD, from a higher time frame standpoint and then a lower time frame standpoint, just so we can see the fractality of the market from a fundamental perspective to give you a beginner's guide into understanding the realm and world of smart money. So let's first go over quickly, before getting into the charts, the 3 core components. So we have market structure. We have higher highs and higher lows, and we have lower lows and lower highs. Then we have supply and demand. Well, how supply and demand and market structure come into play is, let's say we are in an overall bearish market, right? So we're making lower lows and lower highs. Well, where is the last buying volume in the market that fails to generate a higher high that creates a lower low to go with the overall market structure being presented? Well, that is right here. This is the last buying volume that fails to create a higher high and ends up rolling over to continue with the higher time frame structure. So this becomes our supply level. Very similar to this is if we're in an uptrend, the last selling volume before the higher high is created is what creates the demand level, because price is failing to continue lower. Therefore, there is demand at this level because prices will rise as a result of more supply. There is no more demand, there is supply. Now, once there is supply up here, then price starts to fall, right? Because there's no more demand. So price comes back into that demand, and that's where we can take price. So from an economic point of view, you can understand all of those intricacies. However, just from a pure basic standpoint, the last selling volume before the higher high is created in an uptrend, that is where we will see the demand. Now, where does liquidity come into play? So we know higher time frame, lower time frame structure. right? We have the higher highs, the higher lows. We have the last buying volume or the last selling volume. So we have the supply and demand down. Now it comes down to understanding liquidity. Now, liquidity should be presented to you around the levels in which we're looking to trade, because if we are in an uptrend, we want to be buying at discount. Just like if we're in a downtrend, we want to be selling at premium prices, right? We don't want to be selling something at a discount because we want to get the best bang for our buck, right? We want to get the best price we can. Just like if we're buying something, we want to buy at the lowest possible price that we can possibly buy it from. For example, if you are going to buy a pair of shoes and the shoes are worth $100 and someone's selling them for $200, why would you pay $200 for them when you can get them for $100, right? We want to be buying at the most discounted price possible. So understanding premium and discount is also very important, but from a fundamental standpoint, liquidity can be introduced into the market in a number of ways. In the form of a retail pattern, whether that be a head and shoulders, creates the neckline, which creates liquidity below the neckline. Price sweeps the liquidity and then continues. There's also just pure equal lows. Price could sweep the equal lows, sell to buy, into the demand level, and then continue. And then there's also ascending liquidity. There could be a trend line of some kind. Retail is buying off the trend line. They take the liquidity, aka the stop losses, and then they continue in the overall direction. So from a basic standpoint, what is liquidity? What is actually going on here? Well, we first have to understand that it's not us who controls the market. It's the institutions, it's the banks, and the groups of people who have the majority of the money, who can actually manipulate price and move the market. So when retail traders are trading at a specific level, let's just call it support, right? Retail traders are told to buy at support. So if they're buying at support, they're placing their stop losses below here. Now I know what you're thinking. Oh, stop losses are, just a way of getting out of the market, and then you either lose or you win if it hits stop to break even, or if it hits your overall stop loss, right? That's what everyone understands from a pure basic level, and that is truly the case, right? However, how do we understand stop losses and liquidity together? Well, stop losses are liquidity. It's money. So if you are buying at support and you are placing your stop loss below, you have agreed to the market that you are going to sell back your position to the market at a lower price in which you bought it from, because you think that if price is going to come down and hit that said level, that you think it's going to continue lower and you don't want to lose even more money. So that's why we have stop losses in the first place, right? So when you have to sell back your position to the market, you are selling to someone else. For every buyer, there is a seller. So who is buying from you to move price higher? What creates the sell to buy? Well, price is manipulated lower, sweeping stop losses. You are buying, but now you're forced to sell back your positions to the market. So the institutions who were selling originally are now buying because they're taking your liquidity and they are buying from you. That was what pushes price higher. So when price comes back down to mitigate, what does mitigation mean? It means to make less severe. Well, when they had to sell the market in order to buy it, they're now in drawdown on their sells from all the way up here. So they have to come down and break even on them. That's what we call mitigation. Come back down to that same level and continue. Same thing for buying, right? If we are selling at a specific level, then if price buys up and sells off, retail stops are here. If you are selling, you have to buy back your position at a higher price than what you sold it from, which now you are buying from someone, aka the market or the institutions are selling to you. Boom. Price pushes down. Buy to sell. You are selling, then you have to buy back your positions. You buy, they can sell to you. That's what pushes price down. All right, so having the understanding of how stop losses and orders and liquidity come into play, we can then understand the rest of what we're going to be talking about. So from a daily time frame perspective, let's take a look at NZD CAD and how we can just put these three core principles together. And I know we could be going into all of the time frames and looking at it from a time and price standpoint and all that stuff, which is definitely very crucial. But from a pure basic standpoint, let's just put just these three core principles to practice. All right, so liquidity, market structure, and supply and demand levels. So we can see in here that clearly we have equal highs or descending liquidity. 1, 2, 3, 4 touches of this trend line. So retail is probably selling at these levels because they're told to sell at resistance, placing their stop loss above it. So when price rises and takes their stop loss, then it can sell off because it buys to sell. Liquidity in the form of stop losses, they are selling. Now the liquidity is run. Now it frees up that liquidity. They're forced to buy back their positions from the market, and that way the institutions can sell to them and continue with the overall direction of the market. So when price comes back up and breaks counter trend structure here, this is where we see the last buying volume, right? This is the last buying volume before the sell-off that created the lower low. Now we have shifted structure here. So now we want to be seeing an overall pullback for continuations. So we do that, we pull back a little bit, but we stop. We create equal lows. So now we have sell side liquidity here. We push back up, kind of consolidate around, but what is that actually doing? That's creating buy side liquidity to go run before again we continue in the correct direction of trend. So we bought to sell. Now where do we look for the last buying volume? Now, yes, this is the last buying volume, but if we scale into this, let's go to the 4-hour time frame and scale into that level. And what we find is that we have the last buying volume taking place right here. This is the last buying volume in the market. We can see pushes up, we failed, and then we just totally collapsed. So that will turn into our supply. But before we can come back up there, how do the institutions, how are they able to place all of their positions at that level? Well, they have to free up liquidity. So the same process happens over and over again. We create buy side liquidity, we then go and run it, and we continue, we pull back and short, right? And that's exactly what happens. So now let's go back out to a higher time frame. I'm just gonna stick to the 4-hour and the daily so we don't, waste too much time going over every little tiny detail, but the same concepts apply. In a bearish downtrend, which we're in, we have to look at the last buying volume. Last buying volume was here, and then we do have an intermediate level buying volume right there. So it kind of creates that intermediate level of supply. And you know what? We didn't come up into that level and we would have missed the trade. But if you had have gotten in off of that level, you would have been in. So same sort of deal applies here. We create liquidity and then we sweep it very strongly, very strong, and then we continue. Huge buy to sell. So let's zoom back out. Obviously, we're in a bearish trend, so market structure. Where is the last buying volume here? Well, the last buying volume, we have to look at the counter trend. High, low, high, low, high, low, high, low, high, low, high, low, high, lower low. So the last buying volume takes place right here. All right, I'm gonna make this black so we can see that. So the last buying volume takes place. We make a lower low. We don't come up into that buying volume. And again, we continue to push lower. Finally, we come all the way back up. But you know what? Just because we don't hit it initially doesn't mean it's not valid. And what it's doing is creating more liquidity to go and run, which then creates the last buying volume here before the continuation. So where was that mitigation? It actually mitigated quite quickly. It mitigated right here. Break and retest of this level. Now, break and retest can occur within institutional levels, right? So we are coming up into liquidity. We bought to sell. We have broken the structure. So we are simply retesting this level as supply. So this is supply now, and now we can continue with the overall direction of trend. So again, we make an overall lower low. So let's look at the lower time frames now. Same sort of deal applies. New supply is right here, lower low, lower high. Where's the last buying volume? Right in here. So it creates the new supply. And in the process, what do? Sweep liquidity, free it up, buy to sell. So we know that this is institutionally formed. So where can we be looking to get in again? Where is the last buying volume again to create the supply? Right in here. The last buying volume that occurs, as we can see within that doji candle, that's the last buying volume before the institutions really took price short, because we had a lot of orders come into the market, very volatile move to the downside, creating that lower low. We come back up, we mitigate, and again, we create, the last buying volume right in here before the trend breaks to the downside. And we come back up and mitigate that once here, and it also comes back up a second time deeper into that level, and then we create another lower low. But we know that we have to keep following the trend until it breaks, right? We're not going to be right 100% of the time. So with that being understood, let's just keep taking it off of the last buying volume until finally either price breaks structure or it frees up more liquidity to continue short. And this is what I mean. If we're making lower lows and lower highs, we're trading off of the last buying volume in a downtrend, the last supply zone. This is why I love NZD CAD, is because it respects this so much. And I know there are more intricacies, guys. I know there are more fine-tuned details, all these little tiny details that truly matter on a day-to-day basis that we really need to pay attention to. But from a pure basic fundamental level, if we can just understand market structure in its finest form, supply and demand levels in its most basic form, and liquidity in its most generalistic form, we can have a pretty good understanding of the overall components of smart money concepts. So let's keep going. Let's just keep following the trend. If we won this trade from this level here, great. If we won this trade here, great. If we won this trade here, great. If we won this trade here, great. This trade here, great. Perfect. Let's keep going. lower low, lower high. Oh, we finally lose. Okay, that's fine. We're going to lose eventually, and this happened to be just a liquidity run. If I take it from the previous high, we actually wicked into that previous high, so that is a liquidity run, and now we push back down into the range, of this expansionary move. And the same thing can be applied in a lower time frame. Supply in here. You can even go supply in there. I mean, there's imbalance, but there's supply right there. I mean, you can do it all day long, 24/5, every day of the week except Saturdays and Sundays because the market's closed. But anyways, let's go into the lower time frame and how we can apply it. So let's scale into like the 15 minute and look at what's going on. So now the lower time frame structure we can start paying attention to. Right? The higher time frame structure we know is bearish. We have come up into that level of liquidity. We have swept the liquidity, and then we have broken structure to the downside again. This is just higher highs and higher lows. We ran the liquidity and came lower. We broke the structure. So now what do we look for? The last buying volume. Where is that? Right in here. And that's exactly where we came into, and we continued short. So let's keep following it all the way down. Where is the last buying volume here? Well, really, it's right there. There's some other levels in here, but let's just go based upon the fundamentals, right? The last buying volume here, and that's exactly where we come into again. And what do we do prior to coming up into that level? Well, we generate all this liquidity, equal highs, then we run it, buy to sell. What creates the last buying volume again? Right in here. Stop loss is above that high, and obviously it didn't hit it. We came up into it, mitigated, and now we rolled over and continued short. So now let's just back up a little bit. I'm going to get rid of all these markups, and let's go back out to the 4-hour time frame. So from a higher time frame perspective, now we can treat this all of this lower time frame stuff as a higher time frame expansion, pullback, expansion, right? So we are looking to continue short, and now what we're forming are equal lows here. So this is real price right now. So what do I expect? Well, from a pure market structure standpoint, we're bearish. From a pure supply and demand level, this is the last buying volume. Well, really, this is right here, but this is the overall last buying volume. From a liquidity standpoint, let's take a look at what price did right here and right in here. Well, really, right in here. So this is a very interesting concept. So this is going to be getting into more deeper depths of liquidity, but I'm just going to talk about it from a pure basic standpoint. When price sells off, what is it doing? Taking liquidity, right? So enticing sellers below the breakout of this support, but also taking any buyer stop losses that they were buying from support here. Then we run the stop losses of any sellers who were selling below the breakout, come back up, and then entice the buyers above the breakout of this resistance, and also sweeping the stop losses of anyone who was selling with this resistance. Then price rolls over, continues with the right direction of trend, and then takes the stop losses of any buyers who is above this level. So it's a sell to buy to sell. In the correct direction of trend, liquidity has been swept on either side of the market. Now we can be confident in taking price short from our supply level here, or just our overall supply level right here. So these are two levels in which we are looking to take price from. If we scale in even further, we can see that we're all also building sell side liquidity. 1, 2, 3, 4 touches. People are buying in here, and guess what? They're going to be in a little bit of profit, and then they're going to sadly wake up in the morning, and it's going to be the stop loss hit. So guys, that was just a pure breakdown of NZD CAD from a basic market structure, supply and demand, and liquidity standpoint, and how you can put all of this into practice. Now, there are a lot more intricacies, like I said, that go into it, but it is very important that you understand the right concepts and be taught the right information, but also get the right guidance to help you along your journey to develop these skills from a beginner's level to a more advanced level. So guys, I hope you all have a great night. Thank you for watching this video, and stay tuned for more content like this.